Here with our trades, Quint Tatro, founder and president of Joule Financial. Up first, Quint, Apple, which was downgraded at Barclays on iPhone demand falling, sending shares lower, yet Apple is still up 40% over the past year. Your trade, sir, on Apple down 4% today.
Sure. Tyler, thanks for having me. First of all, it's a privilege again to be with you. Apple is a sell in our book. It's not a very popular opinion, but about 2 months ago or so, we were on your show talking about where to sell and trim and allocate new capital, and Apple was one of those names that we were cutting. The stock is just not cheap at all. In fact, it's very overvalued in our book, selling 28 times forward earnings, and the estimate, if they hit it, it's only going to be about a 7% earnings growth. I think what's most concerning is they had considerably shrunk their float over the years with incredible share buybacks. So when you add that back in, the growth is even more lackluster. The other challenge is that they've levered up their balance sheet with a debt to equity now over 2 to 1. So we're just not fans here. The sell-off today, obviously on the heels of the downgrade is unfortunate, but any respite from here, if somebody has the name and is looking to lighten up, I'd be a seller of Apple here.
Wow. Okay, we've got all the big names today, Quint, so we'll go from Apple to Tesla. Those price cuts boosting its fourth quarter sales. They had 485,000 deliveries, bringing the total to just over 1.8 million last year. The stock fractionally lower. Would you be a buyer here?
I am. I would be. I continue to do so. And this is a little difficult to talk about right after I talked about valuation, because this stock is also not cheap, selling 70 times forward earnings. However, they have no debt. And I think that what's going to happen is at some point we see the Chinese economy turning around. And I believe that's going to be a big boost for Tesla and their sales. And that would translate into a pretty significant boost in EPS. I also bring viewers' attention to technicals, which we don't talk about very much, but the stock has been consolidating for the last 2 years and really looks ripe for a potential breakout here. So you could put your trading hat on and you could basically look at the recent lows of around 194 as a stop and a pretty significant risk reward for the upside. And we do think Elon pulls another rabbit out of the hat and this stock heads to new highs sometime this year.
All right, let's talk about a pandemic darling. That would be Moderna. The shares higher on an upgrade to outperform at Oppenheimer. However, it posted a 40% decline in 2023, which might make it a buying target. Quint?
Yeah, it's not for me, Tyler. This is, number one, first of all, a little bit out of my wheelhouse, but just looking under the hood a little bit, I have trouble buying into a company that's just not profitable. I mean, they have a pretty healthy balance sheet, a nice cash position, but I think today's move on the upgrade at Oppenheimer goes to, kind of reflect people looking for beaten up stocks that they might see some rotation. I would be very careful with that strategy. You're getting a nice pump today, and if you have been trapped in this name, maybe look to lighten up. But it's not a name that we would see until we saw profitability and some further fundamental improvement here in this name going forward. Just not for me.
Well, thank you, and thank you for your clear opinions. Quint Tatro, Happy New Year, my friend.